This is the sixth and final video in a series about candlestick charts and candle patterns. In this video, we're going to cover shooting star candles and inverted hammer candles, along with some additional candlestick rules that you need to be aware of. The shooting star is found at the top of an uptrend. It has a small body with an upper shadow, and the upper shadow is at least twice as tall as the body. The color of the body is not important. However, a red bearish body is slightly more bearish than a blue bullish body. There should be no lower shadow or a very small lower shadow, and the candle following the shooting star should be strongly bearish to confirm the reversal. Also, the longer the upper shadow, the higher the potential for a reversal to occur. Another thing to watch for is that a shooting star will often end up being the centerpiece of an evening star pattern. Once you spot a shooting star, you should then start watching as the next candle develops. If the candle following a shooting star is a strongly bearish red candle, you will not only get a confirmation of the shooting star candle, but you will often get the third candle in an evening star pattern. The inverted hammer looks like a shooting star, but instead of being located at the top of an uptrend, it's located at the bottom of a downtrend. It is also similar to a gravestone doji, except it has a slightly larger body. The inverted hammer has a small body with a long upper shadow, and the upper shadow is at least twice as tall as the body. The color of the body is not important. However, a blue bullish body is slightly more bullish than a red bearish body. There should be no lower shadow or a very small lower shadow, and the candle following the inverted hammer should be strongly bullish to confirm the reversal. Also, the longer the upper shadow, the higher the potential for a reversal to occur. Another thing to watch for is that an inverted hammer will often be the centerpiece of a morning star pattern. Once you spot an inverted hammer, you should then start watching as the next candle develops. If the candle following an inverted hammer is a strongly bullish blue candle, you will not only get a confirmation of the inverted hammer candle, but you will often get the third candle in a morning star pattern. One last candlestick pattern that I would like to point out to you are railroad tracks. Candlesticks that form railroad tracks are often good places to enter a trade. Railroad tracks are formed when one candle closes at or very near its high or low price, with the following candle reversing direction at that same price. As you can see, this red bearish candle closed at or very near its low price, while the following blue candle opened at that same price and moved higher, closing near the high of the previous red candle. Here is another set of railroad tracks at the top of an uptrend. The first bullish candle closes at or very near its highest price, while the second bearish candle drops from that price and actually closes lower than the previous blue candle. Now that we've covered the most important candle patterns in our video series, there are just a couple of final things I'd like to point out. As I've mentioned in previous videos, you should never enter a trade based solely on candlestick patterns. You should always get some type of confirmation signals from other indicators before placing a trade. As you can see in this chart, there was an excellent candlestick pattern, a bearish engulfing pattern. But since there were no confirmation signals, this trade would have been a loser. Also, there is one final bit of advice I'd like to give you concerning candle patterns. This is some of the best advice I could give you because it can help keep you out of losing trades. Always wait for a candle to close before making a trading decision based on that candle. In other words, don't try to anticipate how a candle or candle pattern will look before it's actually closed. For example, take a look at this candle. When this candle's price was down to here, you might have anticipated that it was going to finish an evening star pattern. If it had completed the pattern as you anticipated, you would have had a very good entry signal for a short trade. However, by waiting for the candle to close before making a trade decision, you would have seen that it ended up not forming an evening star pattern. If you had anticipated what this candle was going to do before it actually closed, you might have entered into a short trade that would have turned out to be a losing trade. So never enter a trade based on a candle that has not yet closed. Well, that's it for this series. I hope you enjoyed the videos and will be able to use the information you've learned to improve your trading skills.